The Euro-USD outlook for May 19th to May 23, 2025, technical and fundamental. Breakdown brought to you by X&Y Trading. Welcome back to X&Y Trading, where institutional-level analysis meets real-world trading execution. Today, we are diving deep into the Euro-USD outlook for the week ahead. May 19th to May 23, 2025. Please remember to read the disclaimer in our video to let you know this is not financial advice and that this video is for educational purposes. Let's get straight into the technicals, fundamentals, and our preferred trading strategies. Let us get down to the technical analysis overview. Let us start off by looking at the weekly chart regarding the volume and money flow profile. The Euro-USD remains in a year-to-date uptrend, but recent weekly candles show some consolidation just under the 1.130 ceiling. Now, let us note some key zones we are watching. A key support zone is the price level between 1.10150 and the 1.09625 price level. Note the major floor level at the 1.07358 price level. We note a strong resistance at the 1.12942 price level. The RSI remains above 50 and in bullish territory for now, but it is rolling over from near overbought levels. The CMF and volume profile suggests some profit taking place. There is some volume blocks sitting below current price levels, indicating previous accumulation. So in short, the bulls are still in control, but with signs of exhaustion near resistance zones indicated. Analysis on the 1-hour chart looking at the CMF indicator and the RSI indicator. From insights, we get the following. From late April to May 18th, we saw a rally in price action, then a rounded top near the 1.1270 price level. Momentum has clearly shifted. The RSI value dropped below 50, showing a neutral to bearish tone. The CMF indicator is negative at -0.15 and confirming distribution. Right now, the Euro-USD is boxed between the 1.110 level and 1.120 levels. There is only weak bounces unless the price level 1.1220 breaks with notable volume. Let's look at the 15-minute intraday chart. Zooming in, the Euro-USD showed rejection near tier 1.1200 on May 15th, and then dipped to 1.11100. Then the price bounced to the 1.11650 level. The RSI indicator went from oversold to modest bullish. The CMF indicator is slightly positive at plus 0.07, showcasing some light accumulation. Our point of control is currently calculated at the 1.11400 price level. The short-term bias is upward off from oversold lows, but the upside is fragile. Watch price level 1.118002, the level 1.12000 for a break or fade in price action. Here is some context on the DXY or US dollar index analysis. The US dollar index bounced off some sub-100 lows in April 2025. The dollar index is trading around 100.5 currently. There is some kind of structure forming. Higher lows is now forming a mild uptrend. There is resistance at the 101.0 to the 101.5 level. Support for the price level of the US dollar is sitting at the 99.5 to the 100.0 level. This base building hints at some dollar strength. If the DXY breaks higher, the Euro-USD could fade. If DXY falters, we may see the Euro-USD pop through resistance. Be real cautious now. Consolidation suggests a big move is coming soon. It is important to our analysis to look at some key fundamental events taking place this week. It is really a big macro week that is ahead. Here's your event watch list. On Monday, watch out for the Eurozone final inflation, and Tuesday the 20th of May is the German PPI. Then Thursday the 22nd of May we have the ECB minutes, the flash PMIs, and the US. Then on Friday the 23rd of May 2025 we have German GDP, wages, and US jobless claims and housing. All week long, we must look at all Fed speakers. It is very important to note that Thursday, 22 May 2025 is a key day on our trading calendar. A real data deluge. Some heavy volatility is very likely on Thursday. Our trading strategies for the week looks as follow. First, let's take a look at our short-term intraday strategy for the week 19. May to the 23rd of May 2025. We currently have a range-bound to mildly bullish bias for the week ahead. Our trading plan is to buy or take long positions on the EURUSD at and when price dips to any level of support as calculated in our analysis. Our calculated entry will then be at the 1.11110 WO level. We will place a stop loss just below the 1.10600 level to protect our capital. Profit targets will be placed firstly at the 1.11800 and then at the 1.12200 level to exit the trade. Let me now give you a resistance fade setup for when price rises quickly, up to a resistance level. In such a situation, our entry to a sell or short trade will be in the zone between the 1.1 to 200 and the 1.1 to 400 price levels. We will place a stop loss above the 1.12950 level to protect our capital. We will be looking for profit targets between the levels of 1.1140 and 1.11200 to exit a successful trade. Please note that it is important to monitor volume spikes and CMF indicator divergence around news times. For the more medium-term trader, let us have a look at a multi-day swing strategy for potential profitable opportunities. Our bias for medium-term strategies are some euro strength early on in the week, then some dollar strength later on in the week ahead. Our range expectation calculated is between the 1.11 and the 1.13 price levels for the week ahead. In a bullish scenario, we will be looking to act as follow. We will look to buy price on a break above 1.13050, our first profit target. On such a trade will be the level of 1.14200 after the first profit target is reached, and we took some partial profits. We will look to take some more profit at the level of 1.15000 and finally at the 1.15700 level if price goes this high. Take note, if breakout holds our long-term target at the 1.170 to 1.19850 level is very possible. During a bearish scenario, we may look to act as follow. We will look to sell or go short at a break in price below the 1.10150 level. We will set our profit targets during such action at the levels of 1.09500, then 1.08000, and again at the 1.08500 level. In extreme weakness, we may push our profit target levels to 1.07650 and then to 1.07350. Our preferred swing trading strategy for the week of the 19th of May to the 23rd of May 2025 is as follows. We will take partial short near the level of 1.1280. We will add to our position on breakdown confirmation. A stop loss will be placed above the 1.1350 level to protect our capital from being wrong. Profit targets to this trade will be: first target at the 1.110 level. Our second profit target will be at the 1.100 level, and our final target will be at the 1.0850 level. Alternatively, if the bulls break the 1.13502 to the 1.140 level, we will flip our bias to long, and our targets in such a situation will be the 1.150 plus levels. Here is some risk management tips for you. Traders, tread lightly this week. Reduce sizes or widen stops on swing trades. Don't over-leverage into Thursday. Lock in some profits mid-week. Consider options for controlled risk. Now, finally, the bottom line. The EURUSD is likely to stay between 1.1130 and 1.130 unless Thursday's data sparks a breakout in die price action of the currency pair. Technically, we're seeing exhaustion at resistance for now. Fundamentally, it's a data-driven week. Be flexible, be alert, react to data. Let us finish off by asking, if you found this breakdown helpful, hit the like button, subscribe to X&Y Trading, and drop a comment below. Where do you see your USD heading next? Until next time, trade sharp.